Forecast Edge.
And go now.
Hey, everybody, welcome to Forecast Edge for our live session from 12 to 1 today here. It is February 18th. I keep saying November. A few things going on. Let's just do a quick recap of where the futures markets are, and the general markets are up today. NASDAQ's futures are up almost 1.5%. The ES futures, which is the S&P, they're up almost 1%. Crude oil's up about 4%, and the Russell is up about 1%. So it's an up day today. We made a little bit of money in our futures accounts this morning, catching the up move in the ES and the NQ. If you're part of our Loaded Gun Trading Room, if you're not, sign up for the Loaded Gun Trading Room, and you'll kind of get a feel for what it's like trading micros and learning what proprietary trading is, or what you might have heard of the word prop trading.
That's right.
As far as some of our prediction markets go, the big one that we put on.
Yeah, this is right here. So what we got going on today, and hello everybody, and welcome back to episode 10 of the Forecast Edge midday broadcast. We have all of our positions so far that we've put on going in our favor again, and we'll have all of our plays up here, but we are going to go over our play that went off 2 days ago. This is the GDP hot print. This will be a continued version and updated from yesterday, because we got our information that we were waiting for. But Pops, if you want to fill the people in who weren't here yesterday on what this position is, please feel free to do so.
Sure. So what this position is this is obviously based on gross domestic product, U.S. fourth quarter. The Atlantic Fed Atlanta Fed is now the one that gives the estimate. So you're going to hear me say Atlanta Fed, but that's what that is. It's parked at 3.7, while the professional blue chip consensus is anchored at around 2.2%. So simple math: 3.7 minus 2.2 gives you a 1.5% gap and a massive mispricing. And we think this is just mistakes by human analysis, right? More and more AI is becoming more and more accurate with it. So what you want to do here is you want to buy at an entry price of 58 cents. So we even can do it so like that, where we, if I click here, it'll take you right to the trade link in Kalshi. Here it is. And there you are. So right now it's trading at 61 cents. We got in at 58 cents. I think it's at 61 cents. But that's how easy it is, guys. You get these reports from us. You just click; it'll take you right to where you want to be, what the contract is, and then you can put on the trade. So we actually have our money management here. You can see right here, if it's more than 3.4, you're going to hold. That's a high conviction rate. If it's 3.2 to 3.3, that's also a hold. But if it comes under 3.1, which it didn't, this is for the February 18th estimate. We'll know more on Friday, the actual number. So again, that would be our exit strategy. So again, don't just predict profit as our motto here, and that's exactly what we're looking to do. So that is our one play that we have out right now. We have a few of them. They've all been pretty successful. But you're buying yes at above 3.0%. So again, you click here, takes you to the trade. You find your yes right here. Okay. Above 3.0, you would click on yes, which is right here. It automatically pops up, and you would buy it. Like I said, we bought it at 51 cents, at 58.5 cents. So we're up a little bit of money on this trade. We can come to my portfolio. And again, we keep these things pretty low, just because, remember, $1, if you put $1 out, $10, you just get 10 times the return. So it's up to you on how much. We don't advise you on how much you want to put on. We're just giving you what we think. We put probabilities in our favor, obviously, and that's what we're shooting for on this one. So when you come down to this one, right here, how much will core CPI? No, GDP. Where's our GDP trade? Right here. You can see. If I click on this, this is the trade that we have on. Okay. And again, it's still 58 cents, 61 cents. It's still right where we bought it. I mean, there's a little bit of a difference there. Um, Basically the same price. You can still get in at the same price. These are all the plays that we have on currently, right, in our portfolio. Um, you can see if we're right, what the payouts are going to be. We're never going to, put ourselves in a position to lose a lot. We're looking for low risk, high probability trades, which is what you want. We keep things as simple as possible here. So um, we actually had this one. Let's review. We're full disclosure. We changed it to Rick Reader, but originally we did have Warsh, which is very interesting. And again, I think part of that is because we at the Forecast Edge here on that particular trade started talking, which we should never do. We should listen to our bots. Anyway, how much will core CPI increase in January? That's one of our positions. Will Trump create a national Bitcoin reserve before 2027? That's one of our plays. Generally, we don't do too much of these um, political people type trades. And this one, it's who's going to lead Venezuela. But the stuff we really do well here is like these economic data numbers that come out: U.S. GDP, gas prices. Will the Supreme Court rule in favor of Trump's tariffs? These are the positions that we have on right now in our account. So you'll get this edge alert just like this right here, and that'll tell you basically everything you want to know. If you want to take the trade, this is what we tell you to do. Tell you again, if February 18th GDP now estimate, that was the link. So again, let's look at this. You click here. Thomas does a great job of getting it so it's easy for you. There is the update on February 18th. Tomorrow, not Friday, I'm sorry, we will get the actual number, but we say 3.6. So you come back here, and what does our prediction model say? Prediction model says above 3.4, it's a hold. So we're holding that position. If that would have come out at 3.0, 3.1, 3.0, 2.9, we're out of the trade. We move on to the next trade for a very small loss. Not every trade is going to be a winner. Remember, all trading involves risk. Past performance are not indicative of future results. So low risk, high reward. That's what we want to do here. We do predict and we profit. And not everyone is going to be a winner, but we've had very high probability trades go off. We're, I think, at around 87% right now of accurate trades. So you will lose once in a while. We're not gonna BS you like some other people or other sites do. We're gonna show you the truth. Back to these futures contracts. I'm trading back here now. This is part of what we call our loaded gun system. I'm looking for these lines to cross. These are proprietary lines to a system that Norman Hallett started. And I'm waiting for the one EMA to cross through the other. I call it cross trading. I'm a big cross trader myself. And that's what I'm looking for in the futures markets. So again, here we are. Right here we sit. We watch the futures markets for you. If you want to join our room, the Whale's a great program. You get the room and a year of the Forecast Edge, our alerts, which are stock options and predictive plays. Again, things with minimal risk, high reward. That's what we're doing here. That's what Thomas, our algo scientist, works on. We call him Thomas the Tank Engine. So that's the plays right now, and I think Matthew's going to be back in a little bit. He's going to walk you through on exactly how to do it if I wasn't clear enough. So let's see what happens. I'm just watching this market here, looking for maybe a sell-off to come in the next few minutes. If I go to the Forecast Edge page here, By the way, we're at 101 subscribers. We want to thank everybody that's joined us. You get these Edge alerts, like we said. You'll get an email. You'll get an alert to your phone, to your Discord, to our Substack, so you can do it on the fly from your phone. It's easy stuff, and it's all about just making a little bit of money in with what's happening out in the world. We're living 2025. It's a great opportunity for many people that don't trade, that aren't familiar with it, to just capitalize in a pretty simple way. It's almost like if you went to a DraftKings and were placing a sports bet on these predictive markets. Futures are a little bit different here. We're trading futures and stock options, and we give you some pretty cool plays. Again, markets are all up today. Getting maybe a little bit of a sell signal here in the NASDAQ futures. So I'm going to set myself up with put in an order right here in case this follows through. I want to sell it on the weakness that might be prevailing for the short term. Remember, these are short-term trades. So we'll see what happens with this. Again, thank you for making us one of the up-and-coming um, uh, agencies on Substack. We're over 101 subscribers in about a week here, so we thank you all for being here with us. Looks like it wants to bounce back up a little bit. Update. The trend is your friend. We say some of the cliche things, but they do work. These sayings. I mean, it's true. So we're gonna just watch it. We don't ever jump into a trade unless it's going to give us high probability, and that's in the futures markets, the options markets, or even these predictive markets. Now, remember, when you're in these predictive markets, of those that are watching here trying to figure out what is the predictive markets, it's basically you're betting on um, yes and no bets, pretty much, and you're buying. Actually, think of it as buying stock in that player, or buying a contract in that play. Um, and you can get in and out. I mean, you can get in and the same day get out if you'd like. If your prediction's going the way that you want it to go, you can get out. Here's one right here. Gas prices in the U.S. this month, we're up about 21% on that one.
Nice, beautiful, beautiful, beautiful. So,
and you can't let these, when you see this down 14, you can't let it bother you, because this is a long-term trade.
exactly.
And we also try to filter out the noise and and try to train your mind that unless we're if we're in the trade, we're in the trade because we have conviction to it. So we just don't jump out. These things can turn, no pun intended, on a dime. So it's kind of where we're at today.
Yes. Do you want to go through just executing a quick one for them? Maybe on a crypto contract, or even, through our forecast edge, because I know that we're in our positions here. But go through Cal Sheet Pops and then go to a crypto one real quick.
All right,
And
so we can
explain
go
the
to
percentages, or if
all
you
right,
want
so
me
we can
to,
go
I
to a
can.
crypto here.
That's a good one.
So this is, let's say right now you think Bitcoin's going to be above 67,000, or is it going to be above 67,250 at 1 o'clock Central Time, 2 o'clock Eastern Time? It's a simple yes or no. If you jump if you wanted to buy this, you would jump on this. Now, I like trades when I see something over 70. I generally like these trades. So all you would do is click here by yes.
Mm-hmm.
Okay. You can go by contracts. I like to just go by dollars. I want to know what I'm shelling out. Matthew, like
Do you mind
contracts.
explaining that too, real quick? How there's a dollar, the contracts in a limit order.
So if I put in $1 here, guys,
Right.
okay, you're gonna get X amount of shares for that. If I put in $10, look at the return.
Right.
I'm gonna make $13. If I put in $100, you see how that works?
Right.
But right now I'm gonna say I'm gonna do a $5 play
Mm-hmm.
on Bitcoin being above.
Yes, that's Bitcoin's price today at 2 p.m.
1 o'clock
above
Central Time above 67,000.
Exactly right.
I'm going to get $6 if I'm right. My cost is roughly $4.47 because Kalshi's going to take out a little commission. That's how they make money. That's why they want you to trade. I'm going to put that order in. I'm done. That'll now be in my portfolio.
Right. Okay, and now let's go to our
my portfolio.
We'll show you how you can buy it in dollars and trade it in the contracts, and you can scale out.
So here you go, right here.
Right. So, Pops, you want me to take over on this one?
Sure. Well, I mean, I got 6 contracts on.
Right. So
and I'm in at 69 cents.
That's exactly right.
And this is it right here. And I got until 1 o'clock, which is when we'll be wrapping up the show. So we'll stay on and we'll keep that position on for the rest of this situation.
Right. So I will go back over here. Again, this is the Forecast Edge Substack. Today we are going to be going over some of our edge alerts that are active right now, and most of these have already, and if not, are continuing to grow in our favor. Okay. So this was the gas trade. This is a good one too. The thesis was the BP Whiting strike, right, which is the corridor. We are exploiting a narrow volatility window. The national average is already hovering just below 2.95, right? While $3 remains a harder ceiling without a material supply shock. We are boxing the price into high probability landing zone, okay? $2.95 or $2.95 to $3. Okay, this is the two-legged position, and as we go back to Kalshi here, you can see why we're doing this, and both of them are working in our favor at the moment. And this trade's been on, let's say, for just about 2 days, 2.5 days. We have already seen returns of 15% on this exact play so far. And then even on our play today for the XLE, which we'll get into this play too, another one of our edge alerts, the BNO and the XLE, both of these are having good days in the market in the intraday session. So real quick, why we do both legs? Because by buying both, you create a risk-defined corridor, right? You aren't just betting on a direction, you are betting on the speed and limit of the move, okay? The lower risk is this. You limit your net loss to a gap between your entry cost and the payout of $1, okay? And the higher return on investment is if gas lands in the sweet spot of 295.1 to 299, right? You win on both contracts simultaneously.
It's what they call in trading is it's basically like a hedge and a spread. Okay, you're not just going with one, you're going with two. So you have a couple options. You might lose on one, make on the other. That's the idea. So you're protecting yourself on both sides of that.
Yeah, and for this one, these we still have till February 28th on these contracts, okay? So this was the snipe, which was yes above $2.95 at an entry price of 55 cents. As we go back here, you can see that we got in on this contract here. We got in at 295 at 64 cents. So even the trade when we got the edge alert was almost 9 to 10 cents in favor of the position of a better entry. We're filled at 64 and it's still working for us. Again, here we are with, excuse me, look at this, clear this up for you guys a little bit. Okay, so right here, limit entry price was 55 cents. Today they're trading at around 60 or 68 cents. Okay, that's a 13-cent profit in our favor on this one. Okay, and it's the inevitable itch, which is today's AAA average is $2.93 to $2.94. Okay, we only need a fractional move to clear to $9 or $2.95, which is that sweet spot that we were talking about. And another great thing is what we say is that if you can click it, you can trade it, because our edge alerts have the
And that's the
contracts
best part.
that we want you guys taking um right off the bat. So this one for our edge alert here, right, which is going to be our gas money trade, right, which is so classic. We're talking about putting some gas money in your pocket. Um, this is going to be the setup, right, where we're telling you. So the yes for above 295 at an entry price of 55, and the no of above $3 and an entry price of 64 cents. As you can see, we are in these positions, and both of them are working in our favor now, and it's all scalable. Remember, that's the beauty of trading. Trading is a scalable and a scalpable instrument and thing of nature. Okay, so you see that 15% back. These trades have only been on for 3 days. These predictive markets show results, and they show results quickly, as you see here. And again, what's nice about these is that these are coming straight from the edge alerts. So we are giving the concept of the edge alerts is that you are receiving the trade idea, the reason that we believe to be getting involved with these positions. Okay, but the beauty is that we tell you the exact contracts that we're going to take, and the best part is that we also provide the risk management for these positions. That is an ABC as clean as it gets trading opportunity in concept. We are providing you guys with all the money management, the contracts. All you have to do is watch us execute them, just like to what we're doing here today
And
on
whether you want to take them or not,
right.
that's up
That's
to you. We are not CTAs or CPOs.
right. But again, we will always be here. We are right here on our YouTube channel, and/or you can contact us via email, text, phone calls, social medias, however you guys choose to get to us, because we want you guys to be making money, and we want to help you guys learn how to use these financial instruments in your favor, whether it be for side hustle, for a full-time income, however, financial freedom, whatever you're looking for. We want to be a positive and a progressive force in your trading career. And we offer that's another service that we offer, is the one-on-one trading and coaching, where we go over with our partner Norman Hallett with the Discipline Trader. A lot of our individuals in our community members are part of the Discipline Trader, and that goes to show, trading. There's multiple avenues in ways to generate profits using financial instruments, and we are here to show you how. And not only how, we are here to show you the proper way to use the risk management to become the 1% of the people who make it in an industry like trading, whether it be options, futures, or even these new predictive markets here. But here was the option play. So, Pops, here's another good one to go over. Most all of our positions at the moment that are active are at least in our favor, and/or just about break even to moving in our favor at the moment. And even, like, we'll go over some of these declassified plays, but here is the where are we? Right here, the energy. Okay, this was a right now we got this contract down. We scaled. I'll show you on a chart, but this was the options play, the XLE and the BNO. Okay, so how these ones ended up working out. Okay, we covered on the BNO, but we have here. Let's see. Okay, so our XLE right now, our edge when our alert went off for the XLE contracts, we got in at an entry price of 515, 525, and as you saw here, we had the perfect median fill price. We are filled at 520. It's been open for 9 days here. And again, right now the contract's bid is at 605, and the offers at it's a 30-cent spread, but the offers at 635. So this trade is potentially. Right now, we're already in $68 of or $75 in favor here. But again, if that ask gets hit, then we got another $30. It's $105 return on investment for our contract here in 9 days. So we'll keep an eye on this one. The BNO contracts. Let's see this BNO contract here. Excuse me. So see this, exit. Okay, great. It's telling us what to do. Exit if it closes. So watch this. This is the XLE. So let me jump this to here for you guys, okay? Because we had the rules of engagement for this position on XLE. Like I said, we covered our BNO, and on XLE, and even BNO's reacting, uh, very well today with oil being at up $2.65. Our partner and I, or my partner Thomas and I, were talking this morning about it trading above $64. It seems like oil, like we said, the idea for this trade is that oil is the last hard asset to take off, as you've seen in the last year or 2 years. We've been seeing these hard assets such as gold, silver, uranium, um, making historic highs. And right now we're thinking that oil is the last hard set, lagging at the launchpad prediction markets, right? Price immediate war risk at 1%, which is a misprice of 53% by June. We are buying the inevitable repricing. Okay. Now, expiry on these is June 18th. We got a while to go on these plays, but remember, this is the most important part of it. You will either be sent, an edge alert that's addressing that you would need to get out of the play immediately if it started working against you in any way that wasn't appropriate for a financial instrument to act. We will get to you and cover you. But remember, we do not use option prices for stops, okay? Option prices lie during chop. The underlying price does not. And the thesis is that if the XLE stock, which is right here, closes under 5150, we exit immediately. But we already have updated those rules of engagement, as you can see here, which it did the gap fill that we were talking about last week. As you can see here, we moved our stops up to $52.50. So if it goes any lower than this, we will be immediately exiting this position. But check this out. What's beautiful, and one of my favorite stuff parts about trading options, is the theta on this. Is we have a premium contract, and we have 120 days till expiration on this one, and they're already in the money. This is going to be a good play. Again, don't be chopped out because you're hearing things on the news or that you are reading articles on social medias. That is not what you have to be thinking of. What we're doing here um, is we are going to be helping you on the midday broadcast to understand what trades we are executing, and you can watch us take them live and perform them in front of you. All you have to do um, is go here. So real quick, I'll do our own little promoting. This is our website, theforecastedge.com. Okay, at theforecastedge.com, what you do is you join the war room. When you join the war room, you will be able to select which plan's right for you. And again, as my father has said, when you first sign up, you can do the the plan here, which is going to be a free plan that has the occasional post. But for the actual plans and members of our Substack and of the Forecast Edge trading community, you get granted access to these, which are the edge alerts, and that's what we go over every day in our broadcast, our live broadcast. The plays that we provide, our trade ideas. Remember, these are ABC trades. We give you the trade idea, we give you the contracts we're interested in, and we give you the risk management that we are following as our own traders.
And
Remember,
you're
it's
free to pick whatever trade you want.
that's
You
right,
don't have to get in every trade. It's up to you. We're not CTAs. We're not
right,
pool operators. We're just telling you trades that we put on that we feel have high probability and explaining
right.
to you why.
Okay, so, and again, remember, one of our new sayings here is that if you can click it, you can trade it, because one of the features in our Substack and our articles is that we have the trade link here for you. So if you're in these positions, or if you're interested in taking the positions that we're in, all you have to do is click the trade link, and it takes you directly to the page where the trades are located, okay, in the contracts. So this one is go
Show them
ahead,
our
Bob.
current. Show them the one we just put on. See where
Again,
it's
so
at.
this one here, we're filled at 58.50, and it's at 61 cents. Like we were saying today, the contracts that we have, the three active plays for our Forecast Edge um Substack members right now, each play is a little bit in our favor, if not already has been in our favor for um these predictive market contracts. So here, this is what we were looking for. This is what we talked about yesterday. Is that it was the money management, the nowcast gauge, okay? Do not hold blindly to expiry. Use the Wednesday, February 18th GDP Now update to scale our risk. This is how we were scaling our risk. So if you clicked here today,
I mean, look at that. Thomas has it right there for
right,
you. Tells you there exactly what you need to know.
that's exactly right.
3.6, we're still holding the
So
trade.
it says it right here, right? So this is above 3.4. Hold high conviction. The 3% floor is safe even with a surprise shutdown drag. This is a great outlook on our GDP play, our hot print. Ready? The growth rate of real gross domestic product is a key indicator of economic activity, but the official estimate is released with a delay. GDP Now forecasting model provides a now cast on the official estimate prior to the release date by estimating GDP growth using what is this? What is
Methodology.
similar to the one used by the U.S. Bureau of Economic Analysis. I see. Again, we got our number right here. It's at 3.6%. That is all we needed to be reassured that we are sitting pretty on our yes for above 3.0% with the 61. We got in at 58, and look at this. This is so good. When we go here, excuse me, right here, we'll go back to our home screen real quick. When our edge alert went off, it's at 58 cents. So this is still a good time. If you haven't taken this position yet, it's only three. This is becoming a
Same
safer
price. I
trade.
told him that
Yeah.
earlier.
Yeah.
Yep.
Listen. Mhm. All right. So let's see this. Let's clean this up for you guys a little bit. Okay, and then remember we got this new as we're going to execute today, a live Kalshi position. So this is the one we put on, right? We're filled at an average. I'll tell you how to read this again. So we load into our contracts, right? And it's telling you right here when you see this blue in the check, the blue check, it's telling you what your position is. We have 6 contracts of yes at an average price of 72 cents. Remember, when we're looking at these numbers here, like on this contract, 66 cents for a yes and 38 cents for no. What these are telling us is that the probability and percentage is there is a 63% chance that Bitcoin at 2 p.m. Eastern Standard Time today will be above 66,750, right? Now, as things happen, if the market starts flushing, probabilities change. This contract has 24 minutes left on it, but as you can see, these are still numbers of these numbers are fluctuating on us, okay? So
We put that one on.
as
That's not one of our
right,
trades. That
no, I'm
make sure
just
that we wanted to show you how it works.
yes, but now the trade that we did
It's
take
bad.
for the example of trading this one, right? We go here and we were going to sell our position. We still have 6 yes at 72 cents. Right now this one is at 25 cents. Again, it's the $5 example trade that we put on, but I want to show you guys how to trade this and we can scalp in and out, right? So here's 3. We have 6 yes at 72 cents and I'm getting out of half of them here. This is saying that I want to get out of 3 contracts of yes at the 72 cents. The estimate payout is 88 cents. I'll review it and submit my order. Now, I got my 82 cents credit back, okay? But look, now it's still rendering that I have my 3 contracts of yes at 72 cents, meaning that it understands that I didn't get out of the full position. And if I want to, we'll do it just like this, right? Review it. Okay, and then we're going to do this. And with that, we are out of our full position on this one. Again, that was our example trade of the day of just how to execute some of these positions using these predictive market instruments, okay? Um, and these are the ones that we had on live. Pops, if you want to go over this one real quick one more
No,
time.
you did a good job. That's it. We're up 16% on that one. Again, some of these are longer term plays. So we just again we know our risk going in. Is the bottom line is all these trades we kind of know our risk going in, but minimal risk, maximum profits.
Mhm. That's right. Yeah, these positions are great. And they're fun. It's a cool up and coming. What's great is
You're
that we're ahead of the curve for it.
you're ahead of the curve. You're going to be taking advantage of
Mhm.
point and click ways to profit right from your phone.
Mhm.
Things that 10 years ago would never even be here.
That's
So
right.
we're just opening up that world to
Mhm.
you, giving you some ideas and
Yeah.
suggestions. You might start trading some of our stuff, or you might say, "Hey, I like doing this one better."
Mhm.
We're not a sports book. We're not looking for sports; those don't work.
Right.
You know, but we're going to try to put the probabilities in your favor in the
Yeah.
economic news categories.
Yeah, and then Pops, if you want to do an example trade of our other systems with our EMAs and explain kind of
Well, this
how
is
we
part
got
of the
our
trading room that I mentioned
yes,
earlier,
that's
guys. And with
exactly
the
right.
whale, you become part of our trading room. We're trading futures.
Hmm.
We trade micros, again, small risk instruments to try to make some decent money.
Hmm.
This is pure day trading futures. We offer that
Right.
just to show you how that works. Again, we don't make suggestions. We show you things that we know
Hmm.
work that we want to share with
Yeah.
people
And again,
and
this
try
is
to get you
another way.
into it.
Just this is another way, as you can see, even for what I provide for our disciplined trader and our forecast edge community are the levels that I go out and create for support and resistance, and these things work like magnets for the market. Again, one of the oldest sayings in trading. Look at this one. It's a top pick, and it just kept. It's
Support and
still down.
resistance.
Support and resistance. If it's traded there once, it will trade there again. Um, and that's just the name of the game and the nature of the markets themselves. Mhm. And we got gold trading above 5,000 again today. Gold's up $100, $101. Crude oil is up $2.50, almost 4% today. And that's with our XLE and our BNO. BNO is actually the outperformer of our two oil stocks that we were mentioning on our Edge Alert. This BNO is at $1.25, up 4% today. You know, Bitcoin's just kind of been getting hammered, but this goes back to show one of the first plays that we had in our edge alerts when we went public and went with opening our services. This is right here. The look, January 29th, BTC gamma attack. This is one of our best plays yet, okay?
We
This
did
was
this.
the IBIT Bitcoin this is the iShares Bitcoin trust and ETF. So what this was, check this out. IBIT, Feb 6th, $47 puts were the contracts that we went on. Okay. Same difference with the 47s. We had the 46. Both IBIT February 6th puts, 47s and the 46s. We saw returns of 500 plus percent on these plays. Let me show you the chart. Remember, that went out on the 29th of January. Here is Bitcoin on our daily chart, okay? I'll refresh this for you. Let me get my support and resistance out of the way for you. Watch this. Here we go. Here is the 29th, January 29th. Bitcoin is trading about 88,000, okay? Now, today we are trading at 66. That's a $22,000 differential. And look at this. We called this on the 29th. You'd be in favor even if you just held again, I can show you right off of our website here. This is our recent MVP, the IBIT. So
So
go ahead,
even if you
Pop.
open an account with $100,
Yeah.
you would add a 502%
Hmm.
return on that trade. And we're not those guys that are just going to show you the good ones. We got bad ones, we
Right.
got good ones. But right now, we're
They,
firing
right.
Thomas the Tank Engines firing on all cylinders. And you would easily get your subscription back if you so
Oh
choose to
yeah.
subscribe, and you'd be having
Because
money in your account.
yeah, because these ones here, again, these ones here, when the $46 here, the $46 puts here had returns of 502%. In the 47s, where we got in on a limit order of $1.05, these contracts ended up trading in the 900s, 995, 985. That's almost an $880 return per contract, and we had three of these on. And again, that just goes as time goes on and progresses, we will have more of the catalog, which you guys can go back and watch our live streams that have these trades. We executed these trades live in front of um you guys, so we're transparent. Some days our positions are up big, some days our positions are down a little bit, but we will help you through and through manage and keep on top of these positions. Now look at this. Ready? You see how Bitcoin's starting to push back a little bit. Now we can go to the Kalshi prediction, right? Go back to the cryptos. With only 17 minutes left on these positions, look how these numbers, these go from 7%, right? So will it be above 66? Let's get into something like this, right? We know that it's trading, and I'll break this into a trader screen for you guys real quick, okay? Watch this. We'll put this up here and put this right here. And we got Bitcoin trading at 66,380. Okay, here are our contracts on this side. We got 66,250. And if you say no, it's a 35% chance of getting in, right? And again, just to show you, we get in on these trades in dollars. If you put $2.50 up, you'll make $7, right?
It's risk reward, but
Right.
we don't really
Again,
don't do these type trades.
no, we don't. But just showing for people who have been having a hard time executing these positions, we get in at $2.50 and we get 7 back if it works in our favor. Okay.
But to give you an idea,
Mhm.
we're going to be the trades we give you
Mhm.
are trades that will look similar to that, where it'll be
Right.
looking not so good when we get in. But that's because we have an algorithmic system. We have bots that will come out and tell us the
That's right.
probability. The people are wrong.
Yes.
The system
This
is
is how
right.
you trade it. Okay, ready? So now we know that we got on these. We go to the portfolio, right? See, and sometimes there's not a market to get filled on in that one. See, the volatility of Bitcoin falling right now is changing, as we speak. So you can see that these went from that 13 cents to 8 cents, 9 cents. They'll keep fluctuating. And what's nice is you can even just watch the bid and offer here. It's 15 minutes left on these contracts. Bitcoin's price today at 2 p.m. Eastern Standard Time. That is what you have to understand as the trader, what this contract is telling you,
And you can
okay?
put these on right until a minute before,
That's right.
30 seconds before.
hmm Look, because even these no's that we tried to get in, we didn't get filled in at the 30 cents. Now they're already trading at 43 cents. You have a 13-cent winner on these predictive markets, and you can trade them in contracts, so you can scale out as they begin and or go in your favor. Like this. True 1-to-1. So there we go. So now we're filled on 12 no at 39 cents. Okay. We got 12 no's at 49 cents. We bought them in dollars, and we're going to scale out and or into these positions in contracts. 12 contracts at no at 39 cents, right? And now it's trading at 45 cents, 50 cents. So now you can scale out. I get out of 6 of them. I made a $2 gain on the first part of our shares. We still have, let's see, 12. Let me get out of 6 of them, like we said. And there you go. On $5, you've already made almost 90 cents. Again, it doesn't seem like much, but these are all contracts that are perhaps, if you would, how you use these as a trader is what, the opportunities right there in front of you. It's
Trading,
you trade them.
trade. Even though this is basically gambling on.
It's not
Yeah,
though.
hold on.
Go ahead. Go ahead.
Even though it's a gambling, so to speak, type site where it's yes or no, right? Traders don't gamble. We take probabilities and we put them in our favor.
Mhm.
Just like the house, if you were in a casino, they have the probabilities and the odds are in their favor. We're trying to stack the odds in our favor. That's what we do. And we have the analytics to do that, at least
Yes.
to a point where it's consistently
Mhm.
winning and making money.
Yeah, and I'm going to show you guys another way of just proper risk management using these contracts here on a limit order. We have 6 left, right? And our average price is 39 cents. So what I'm going to do is I'm going to put a stop at 25 cents, right? 0.25. If it gets to 25 cents and I have good till close, I will be taken out of this position, okay? With that being said, I'm sitting and now I'm waiting. And I should have the order in the book there. Or we covered our position. No problem. We broke even. But just showing that it isn't as complicated as one may seem to get in and out
It's
of
point
these
and click.
positions. It really is, like we said, if you can click it, you can trade it, because how we have our Substack in our community in Substack set up is that when you go into these our post, right, in our edge alerts, this was the gas money trade we were talking about earlier on the call, but when you go down here, it says immediately Kalshi trade link. You click this and it takes you to the exact contracts that we want you guys to be or that we
Recommend.
as individuals ourselves will be taking.
You don't have to take them.
That's right. You don't have to take them as traders, but we also will be doing the live management in the broadcast here. What we do is that we manage these positions because we're taking them ourselves. We want you guys to be able to um,
Learn about
you
predictive
know,
markets, get comfortable with it,
that's
and
right.
and if you want to take our trades, we hope you do, but you don't have to, and you can pick and choose when you want to,
That's right.
right?
Yep. So I'll stay on this real quick for you guys. See how we're looking on this Bitcoin too. Right? Mhm.
You can sit here, man. One
Yeah.
second. I'm just going to take a
Mhm.
second over here.
All right, guys, I'm going to take over for the remainder, the last 10 minutes of our broadcast today. But again, to go over the positions, here we go. All right, let's go play by play. The first one, right? Our first one is the GDP hot print, which we are going to get our exact results tomorrow, okay? When the GDP numbers come out, right? So our contracts on this one, right here, we wanted to buy yes at 3%, above 3%, okay? This is the high conviction tactical play to capture the model consensus gap, okay? Entry price. This is the edge alert that we are giving you guys. 58 cents, and we are looking for it to get to its full maturity of $1. Implied volatility or probability, excuse me, is 58%. And with our numbers through our engine, it's giving us an additional 17% rounding to 75, or we got 75% based on our now castability. And again, we told you yesterday that if it was above 3.4 that we hold until the maturity of this contract. That puts it in our favor a little bit more. As you can see, it was at 3.6 today. So we are staying on these positions, and you can see again for our portfolio here, even when the alert went off, we are going to be right here. Let's see. Here we are at 59 cents. So we got filled at a perfect position so far, okay? That's going to be coming out tomorrow. Now, moving on to our next edge alert. Okay? This is going to be um the two-legged play for gas money. This is the gas money play, okay? We have this set up where we bought leg one was yes above $2.95, okay, at an entry price of 55 cents. Our second leg was buying, it's the shield. It was buying no above $3 at an entry price of 64 cents. Again, the logic is the Gulf Coast anchor. It says the weighing Texas 255 and Oklahoma 234 act as massive anchors for the national average to hit $3. These states would need to spike 40 plus cents in the next 14 days. Okay? The barrier is the $3 is a major psychological and structural barrier. Without a total refinery blackout, the national average rarely moves 7 cents in 2 weeks during February. That is our historical data provided from our engine and from us thinking of the trades that we want to be feeding our engine. It's again like this is our partner Thomas saying it's thinking of about gas money. Once we put these trades through our engine, it's telling us how we should be managing positions and acting when it comes to these predictive markets and these instruments that we can trade and help you guys learn how to trade too, okay? And again, remember, we also provide the exact money management that we want you guys to be following, okay? And we don't just predict, we profit. And we want you guys profiting too. So again, to get involved on this trade, right here in the actual edge alert itself is the US national average. Again, we are already filled on these positions. And we got 16 yes at 59 cents. But remember, this is a double-legged trade. We have 16 of yes at 59 cents, and we have 37 no at 65.5 cents, because these are going to help leverage and edge out our or hedge the outcome of our price being above that $3, which we know is working in our favor at the moment. So comes down to our next position here, which is going to be the energy spike, our XLE options. Again, the options play, we do these positions through our tasty trade. We got the edge alert on this for XLE. Again, remember, this is going to be the energy select sector for the spiders. And this was going to be the idea that it's the last hard asset to go to start taking off, as these other commodities have, such as gold, silver, uranium, and a lot of these other hard commodities. The oil is still lagging. As you can see, today might be the first day that we get a genuine good pop to the high side. We're up 4.25%. That's a great thing. We saw that our position was filled on this play, was filled at $5.20. We got filled on our option at $5.20, a perfect median of the entry price that was recommended in this edge alert. And today we saw that the bid was trading at $6.05, and the ask is at $6.35. This was a 75% or $75 gain on the options price in our intraday session today. Again, this is the most important thing. Even with what I'm saying, we don't use the option price for the stops though. Okay, the option price, like we said earlier, during chop, will lie. The underlying price does not. Okay, XLE, we said the first rules of engagement, we're closing below 51.50. We exit the position immediately. We have updated these rules of engagement. Instead of 51.50, we moved our hard stop up to $52.50. Okay, if and when if that were to happen, we will be giving you guys an edge alert, a kill trade. But we already have the hard rules of engagement, and as we speak, this thing has been, as we've had this position on for just about 9 days now, these the XLE ticker has been making all-time highs. This is the new all-time high, 55 and a quarter. We had that on one of our places of resistance for a trim right there, 55.50. But remember, we said if it was going to be trading above 54 by the 27th of this month, we're going to stay in play on this position, and it has been doing a great job fighting upwards. Even now today, it's up almost a full 2%. It's 1.80%. So that's a really, really healthy bounce back here. But you see, like, this is what we were talking about. Another way of trading that we offer in our one-on-one coachings is that there's many ways to trade. Like, this is a gap fill. In my father or Vince or our partner Norman, these guys are pro traders, as am I. I can help you guys understand the execution of these positions and how to be taking them, or when you see something like this gap on the chart, what that's telling you and what probabilities will end up doing. Because you can see when we were done here, this gap fill back here was filled when it came down and traded in this range. Okay, now we have another one, but it's doing a healthy progression back up. It gapped up again. Now we should be able to test these all-time highs of 55 and a quarter and then continue our climb higher. We'll see if we can get 55 again. And that's going to act as a huge psychological number just for traders who are trading XLE seeing $55.55. It's a point of interest only because it attracts the human mind and it catches the human eye. That's where I want to get involved at 55.55. This is what I would say is the next realistic price target for a new all-time high on this. And we have 120 days on these positions. Again, that is plenty of time on our hands, and we have nothing but green flags for this one and for most of our positions that we have on at the moment. Okay. Again, with that being said, remember, go to our website, theforecastedge.com. Okay. That's where you can join the war room. You'll be able to select which plan's right for you. And once you do, you're granted access to the edge alerts, which are the trades that we cover in our midday broadcast. Again, with the forecast edge, we don't just predict, we profit, and we want you guys profiting too. And with these predictive market contracts, it is incredible the results that can be produced in a matter of hours and sometimes minutes. It is seriously an incredible opportunity for anybody who's trying to start trading financial instruments such as futures, option contracts, and predictive market contracts. These are a very, whether we like it or not, a very, very up and coming industry and environment, and all of them, it goes back to any other marketplace. There's opportunity where money is flowing in and out every day, and we are here to help you guys capture some of that profit that is that you can trim and that you can use for whether it's side hustle or even a full-time income, and or just to be granted financial freedom. If this is all you wanted to do, we can help you get to that level. That's what we're here for. That is just that's exactly what we do here at the Forecast Edge, and with our partner Norman Howard. We teach traders how to become the 1% of traders who make it, whether it's the mental game of trading or the actual execution of trades. That's what we're here for. Okay. And with that, please like and subscribe. Make sure that you guys are checking in on our YouTube channel with these midday broadcasts every day when we go live on our channel, so you guys know what's going on with these positions. And again, you can always reach out to us via social medias, text, email, calls, however you need to get to us, however we can make your life as a trader easier. That's what we are here to do. So remember, don't just predict, profit, and we're going to see you guys tomorrow. Okay. Thanks for checking out the stream.